So, KB, obviously, we had a brief chat earlier, though. You found that exercise useful, yeah?
Yes, yes.
What was it about it that particularly helped?
I think it's just mainly be patient, wait for your setup. Preferably external sweep
Yeah,
and all time frame they need to be aligned.
yeah, yeah, definitely. And sometimes just waiting and and seeing that process through, I think it's easy to kind of get lost in all the analysis and the trading that we do through the week, right? And the weekend is a real good time, real good opportunity for us to get extra bits like that done. When you're put into a position where you are trying to find the perfect trade, it effectively conditions you to be basically better in live markets. And ultimately that is the aim, is to get you as efficient and as refined as we can in live market conditions. I think the bit you mentioned about external sweeps, absolutely agree with you. Are you talking about external sweeps on the 15-minute or external sweeps on the hourly?
I think 15 minutes. Hourly, I think you have to wait longer for trades in that.
Yeah. So I don't think it's necessary on the hourly, because
Hmm.
if you have an internal sweep on the 15-minute,
Okay.
if you have an internal sweep on the hourly, but you have all the structure you need on the 15-minute, then it gives you everything that you need. Because the 15-minute is for a day trader, it's a relatively large time frame to be shifting bearish. And if you've got like a false break and a true break on the 15-minute after you've swept some sort of internal liquidity, let's have a quick look at just
One thing I've noticed, sometimes when you have like internal sweep, it's price reacting from some order block, supply or demand.
yeah,
So that's why you don't get external. It simply touch the bottom or top
yeah,
of the zone, and then it's just start moving away.
yeah, exactly. And remember, it's what we used to call range liquidity, right? It was that last high before the main high, yeah? So let's say that's our structure, okay, and this is our hourly range. I've got no issue with a trade coming from there, as long as you have the 15-minute structure to support it. Because by the time you've waited for that 15-minute structure to play out, you've had a lot of price action move, and that is significant enough for us to be able to get into a trade. That gives us everything that we need, because you've got enough confirmation for that to be a perfectly valid trade. And we're waiting for the 15-minute externals. I personally, I wouldn't be trading without that. I would
Mhm.
only be taking trades with the 15-minute externals. I definitely wouldn't be taking trades like this, because they're just too high risk to go against you. When you've got that external sweep, and then within there, of course, you're going to have your lower time frame shift, yeah, okay, then you've got everything you need to get into a really high value, high probability trade, and that's exactly what we're looking for. Whereas waiting for the external sweep on the hourly, as you know, and probably you found in your testing, you are much less likely to have that scenario happen, because external sweeps, the reason why they're so good is because they don't happen all the time. If they happened all the time, then everyone would trade them all the time, and therefore they wouldn't necessarily be a great entry ultimately. So I've got no issue with an hourly internal sweep as long as you have everything else. And that is
Yeah.
why we did the schematics with the model A and the model B, because that is exactly that. That is just a model B setup. Whereas if you had that and that and that, then that would be a model A setup. Okay, everything else remains the same. Okay, and that's the important part of this, is that everything else remains exactly the same. The only thing that changes is the location of the hourly sweep. Is it an external hourly sweep? If so, yes, it's a model A. If it's a internal hourly sweep, then it's just a model B. But everything else remains the same, and that's the beauty of it. That's what we're looking for. We're looking for that alignment, like you said. Jason, what about you? What were your three takeaway points from the exercise over the weekend?
Yeah, I loved it, to be honest. I like all the homework, especially with a bit of a time limit. It gives you a bit of a boost, you know what I mean? You've got to kick up the arse to go and do
Put
it.
it
But
down.
um yeah, I just found again, I mean I've been doing them myself before that anyway, but I
Yeah,
just found that they really it sinks in and you get to see different patterns
yeah,
that you probably wouldn't have noticed before.
yeah,
Sorry, Matt, please, um yeah, but again, with all of the majority of the trades that I took, most I think all of the time frames were aligned pretty much.
Good.
And I was having a look, and I mean, I was even having a look on oil and stuff like that, and tried to have a look at some of the indexes as well,
Yeah.
the German 40, and it just works. It just absolutely works.
Good. Good. What would you say your 3 takeaway points? What are your 3 kind of key learning points from doing the exercise over the weekend?
Number one, focus on externals. Number one, always trade in line with the H4.
Yeah.
Well, I predominantly trade in line with the H4.
Yeah.
And a third, trust it. Trust your analysis.
Yeah.
I've been looking at. There's just a few, like on some of the trade setups I was looking at. I was using bar replay, and I was trying my best to try and keep it. I don't know, just trust it. Trust
Yeah.
your analysis. I think that's one thing that I need to get over myself. Is just trust.
Yeah.
The M15 and the lower time frame shifts, and trust what you're doing. Trust your analysis.
Absolutely. Look, I've done all the testing for you guys. This isn't like we're trying to work this out together. This, one of the advantages that you guys have is that I've done all this work prior to this. So you have that extra layer of confidence because you know that it works. You see in my results, in Sam's results, various other traders' results, you know that it works. So there should be that extra level of confidence to say, well, do you know what? If I'm getting all of my checklist met, then there's no reason to not take the trade. And I think a lot of the time people stay out of trades because they're worried about taking a loss. But remember, even on a good week, I might only do a 70% win rate, and that's on a really good week. And if I've got a 70% win rate, then I'm still losing 3 out of every 10 trades, probability-wise. 3 out of 10. Hang on, what am I trying to say? 3 trades out of every 10 that I take are going to lose. So you have to be okay with taking a loss here or there. If you are taking trades and you are, getting 5, 6, 7, 8 losses in a row, then you need to look back into your criteria and your confluences and make sure they're being met, because the chances is that you're doing something wrong. We know what the win rate is. It's between 60-70% on average. So if you're not hitting that, then something's wrong with your rules. And if you're following the rules, then you should be, it should be a 60-70% win rate. There's, you have that layer of confidence to reassure you, because I've done the testing and I can tell you that it works, and you see from my results that it does work. So all you've got to do now is just follow the rules, and the results will come with it. And the more you take those risks by taking the trades when they line up with your strategy, the better you will feel, the more confidence you will have, the more data you'll have for your journals and things like that. All right, so I'm going to go through some of KB's trades. We'll then go through some of, so see how USD CHF is going. I want that dollar trap to blow. If we can blow that dollar trap, then this should fall a little bit. It should be nice. Right, let's get stuck in. So KB, yours was in your here, wasn't it? Yeah. Okay, cool. So checklist for KB: determine the higher time frame and 15-minute momentums. Yeah. I really think you need and we spoke about this earlier. We really need to acknowledge. I'm gonna do a session next week or this week on Thursday for us on the daily candles. I think it's just worth us going through that daily candle analysis again, because it's so useful in everything that we do. Higher time frame and 15-minute are in the same direction. So I think these 2 points are basically the same. I wouldn't say that those are different. Determine higher time frame and 15-minute momentum, and higher time frame and 15-minute are in the same direction. I think that's kind of a given from the first point. So we do want 6 points on our checklist. I think that's a bit of a sweet spot. But I think personally, you probably need to maybe change this to like a daily, what is the daily candle doing? What, acknowledge that an extra acknowledgement of the daily, I think would be good to go there. Mark up your 15-minute ranges, wait for 15-minute sweep, preferably external. I think you should be going only external. Don't trade internal 15 minutes. The stats tell us that has a much lower probability of playing out. Lower time frame FBTB shifts and MSU, perfect. Easy to R to the nearest liquidity point or trap, perfect. Really great rules. I'm just going to go through a couple of these at random. So we'll go on this GBPUSD one. So looking at the daily time frame, good bullish expansion. Okay, so acknowledging the fact that the previous day's candle was a large bullish candle, that's good. It's quite high up in the range. I would definitely be aware of that, but it is a daily, so and it's closed quite significantly above. I would often expect in a situation like this, if we have had a move like that, that we are probably going to get some sort of pullback, maybe into like 50% of this candle. So that's just one thing to be aware of. I'd much prefer you taking a trade like this and then trading it up. Once you get out of that external liquidity point, just remember that ultimately, once the external liquidity point is taken, our theory says that we should be pulling back into some kind of internal, and then we can take a trade up from there. Okay, so that's how you can use the internal versus external theory to kind of really help you with your trading. Let's go across to the 4-hour chart. So yeah, nice big expansion, and again, kind of the same sort of analysis here. So this is now our 4-hour range. We've taken this external, so again, I would be expecting some sort of pullback on here. Okay, so again, just want to be aware of more than anything else. So this is our 15-minute now. Let's just zoom out this a little bit. Okay, perfect. Okay, so we've got a first break, true break. So we've got some really nice structure on the 15-minute, to be fair. We've had a 15-minute external sweep, and let's see what our lower time frame entry is. 15-minute external sweep. Yeah, first break, true break, and then momentum shift, MSU. Yeah, nice, lovely. The only thing I can see is, oh no, because you only got a first break there as well, and then you've got a shift. So effectively, what you've actually got here is a complex reversal. That's your first break. That's your trap. So you could have actually entered possibly a little bit sooner. You might have been able to get into here. Or actually, to be fair, with that MSU, you've probably entered it quite well. So yeah, good work on that one. Like I said, the only consideration I would have personally is just how high we are up in this range. But look, the trade played out at the end of the day. Your 4-hour has pulled back. You've taken out some 4-hour liquidity, and the setup played out. Okay, so just keep an eye on that, I would. Let's have a look at a bullish example as well. Let's grab this one. So Euro USD, sorry, bearish example. So Euro USD, yeah, so nice. Do you use these news things, KB?
Yes.
You do? Okay, fine.
Yeah.
Okay,
I
as long
think
as you use
I
them.
need to turn it off when I'm doing like playback or replay.
Yeah, yeah. I mean, for me, I just take them out because they get in my way. But if you use them, then leave them in. So nice bearish engulfing on the daily. We've got some good 4-hour structure. And then we've got 15-minute. Yeah, so that would be a 15-minute internal. But you've got very clear momentum on this one. So when you start breaking down like that, I'd say the entry's a little bit iffy. I'm not 100% sure on that FBTB, but it's a very impulsive move. I'd actually probably say that this is probably internal structure, and our external structure is probably here. So you've probably got an FBF entry here.
Okay.
You've probably got an FBF entry here. It's still perfectly valid. Just want to be aware of. For me, I personally probably wouldn't be taking that unless I'd had that external sweep on the 50-minute. That's what I'd probably be waiting for. So it's important when we're doing these exercises to make sure they are trades we would absolutely take, because if you look at that, oh, can't really zoom in. If you look at that, I wouldn't really say that that's a liquidity sweep, because do you see what I mean? The liquidity is actually here. So we haven't actually swept liquidity, even if we were using internal. So just be conscious that you're not just trading it because it's dropped. Rather, make sure that you're working down in your time frames, okay? You're, coming down one by one and making sure everything lines up. I'd be looking at that thinking, this probably doesn't meet my rules quite well. But the lower time frame entry does look good, to be fair, and the trade played out. So I can't say a huge amount at the end of the day. And let's just do one more. So good. You've got a nice daily pullback here, liquidity here. Get into the habit of marking out your daily liquidities, because it's just really good for your eyes. Or was that your entry there?
Yes.
Yeah, it was. Okay. Okay, fine. Yeah, so you've got Excuse me. We've got your daily liquidity there. That's good. And then let me move you guys out of the way. Yeah. Okay. Nice. That's your 4 hour. Lovely external sweep on the 4 hour. External sweep. Yeah, external sweep. Yeah, nice, nice, nice. Dubious FBTB, I'd say that, because that's a gap. We don't know if that's actual liquidity.
I wasn't sure actually. So
Yeah.
I was thinking that it might be just a pullback and then can treat
It's
this
a
as
nice
a.
move, to be fair. It's a nice impulsive move. Let's have a look at your lower time frame one. I think your lower time frame one's correct, and you could probably even pull that from here and here, to be fair. Your lower time frame one's correct. And look, the trade, again, the trade played out, so, you know, it's definitely valid. I think that's just one to be conscious. With gaps, just be a little bit careful with the liquidity, because we're never quite sure whether it is. If you think about a gap and when it's printed, you know, you've got to be thinking about how many people are actually putting orders into the marketplace here and then placing stops below there, because that's what it ultimately is in FB, isn't it? It's a grab on liquidity or a take liquidity and close below. So just one to be aware of. I think a couple of refinements to be made there, a couple of things that we could tidy up a little bit, but generally really good, mate. It's good to see you got the exercises done, and this is exactly why we do these exercises, so I can give you this kind of feedback. Jay, I think yours was posted up here, wasn't it?
Sorry, yes, there's some.
Or was it in your channel?
No, no, it's in the chart analysis.
Was it? Nice.
Threads.
Have I gone past it? Arthur, Joe. Ah, there you go. Right, okay, cool. Okay, so let's go through this. M15 external sweep. Identify any previous macro week. What do you mean by macro?
It's just like what you call the master time frame.
Okay, cool.
Macro daily, I'll call it macro daily, macro weekly.
I think definitely on Thursday we're going to go through the daily analysis as well and how we use it, because I think that's something that we're missing a little bit from our analysis. Just understanding the daily candles, the expansion of the daily candles, and how we can use it for timing trades and things like that. Let's go through a couple of these entries. Daily bullish. Okay, cool. Right, let's just go through a couple of these. Okay, so we've got very clear bullish market, but we've got some bearish daily candles. I think we're in here, aren't we? Rather than, I think that daily candle was 1 day after, by the looks of it. Yeah, potentially. Okay, cool.
Yeah, I know it's starting. It does print sometimes.
Yeah, it does. Yeah. M15 external. Yeah, I love that. Yeah, lovely. Really, really nice. Nice little internal shift. MSU. Really nice move into liquidity. Yeah, beautiful. It's a good trade, that is. Let's have a look at this one. Okay, so trading into the trap. Love that. A little bit mucky on the hourly time frame. I get a little bit nervous when we get these pullbacks, but there's that nice cup shape to it, so it's not too bad. 15-minute looks clean. Nice bullish. Yeah, 15-minute external. Did that sweep? Yeah, it just swept. And then, yeah, nice. What time frame is that? 5 minute. Yeah, really, really clean. Lovely rate. Really nice. Let's do one more. So, big bullish expansion. Very high up, and we're outside of external. So that'd be one thing that I'd be a little bit nervous about. If we've got the momentum, then it's sometimes not the end of the world. $15-minute. that was in that cup shape. Yeah, look, the trade played out at the end of the day. When it's mucking about like this, that for me makes me, that's the sort of situation that I'd be looking at, I'd be like, do I want to get involved with that when it is very kind of up, down, up, down, up, down? So that's just one I think just to be a little bit conscious of.
Yeah, that was a bit of a dodgy one, that one.
Yeah. And I think, the part point in this exercise is to find the perfect trade. So, you can just move on from that one. Or at least...
I'll tell you what, right? If one thing I did look, I was looking at oil.
Yeah.
If you look at my oil trades, there's in the last 3 or 4 days.
Yeah.
I don't know if to be honest, I haven't obviously gone through the whole of price action, but oil really nice off the M15 externals, really nice.
Yeah, that's like a good trade to be fair.
That was today, that one.
Was it?
Yeah, but and then I noticed. I thought, because I was looking for a bullish example.
Yeah.
Should have been looking for a bearish one, but I thought I'd just check oil, just have a look at oil, and just suddenly was there.
Yeah.
The move had already happened, and I
Yeah.
thought, it's a beautiful look. And I looked before. There's just a couple of them. There's some nice. It looks like it plays nice off the M15.
There's definitely a lot of liquidity sweeps going on. Might be one to keep an eye on. To be fair, that's not really a chart I've looked at for years, if I'm honest. So keep an eye on it. I'll be interested to see how that testing goes, because there might be a little bit of a pocket of good setups in that. But look, KB Jason, well done. Some really, really good analysis there. I think a couple of little tweak points just to be aware of. Just making sure that when we're doing these exercises, we are, we're trading exactly as we should be in live markets, not just marking up the trade because it played out, but marking up the trade because it met all of the criteria. That's really, really important. Steve and Dom, do you reckon you can have a go at getting some of these trades for yourselves together and we can go through it on Thursday?
Yeah, I've got
Your boys got the time to do so?
mate, I did do so. I've done 5 bullish and 1 bearish.
Oh, you've done some of you? Oh, sorry, mate.
Yeah,
So
I sent it in. You clicked it.
Okay. Well, we'll go through that on Thursday then. So
Yeah, no, that's done. Obviously, mate, I've got to check some of them anyway because I ended up going into a bit too much detail because I'm just focusing on GU. So a lot of it is done through. I've noticed on GU, mate, it misses ranges a lot, like the 50%, but it will react off a daily break and retest. So if you're not looking at your daily, you could be looking at like say a 4-hour, and then your 50% of the 4-hour could be lower than the break and retest, and it keeps having really good positive like breaks and retests off old daily highs.
this
So
is
that's something I've noticed.
exactly the point of these exercises is for you to notice these patterns. Like you love trading GU, and now you've noticed something that you weren't aware of a few weeks ago.
What I'm going to do, I'm going to mark a bearish trade as well in GU today that doesn't, mate, it's a lower time frame entry. So it took a 1-hour external sweep.
Yeah.
But I don't think it'd be an entry. I don't think it'd be a trade to your liking. I technically was looking for a bullish trade, but it did take a sweep of the 1-hour. I just don't think it was like the ultimate conversation. It was a counter trend, so there wasn't like the ultimate. Oh look, it's had TB, FB, and TB, but it played out fucking lovely. And I didn't really trust Monday.
Okay.
Do you know what I mean? But I'll add that one in a minute, mate.
Yeah,
so
cool. Get some in there. So we'll spend about an hour together on Thursday, if that's all right with you guys. We'll go through some of Steve's trades, go through some of Dom's trades, and then we'll spend a bit of time going through the daily candles and just talking about that in a little bit more detail. I think it'd be a good one to go over because it's something that I'm using in my trading all the time now. Generally the previous day will determine what happens the next day, in most cases anyway. It might be that it's pulled back and it's grabbed some liquidity. So it might be a bullish candle, but you might be in a bearish market, and therefore your market there might be primed to go short because of what the daily candle's done on the previous day. And obviously the daily candle's a really important one because so many different trading strategies use it, because it's not just day traders now that are using it. You've also got your position traders, your hedge funds, your big institutional traders as well that are all focusing on daily candles. So it's a really, really good confluence. So we'll spend a bit of time doing that on Thursday, all right?
I'm thinking Thursday, mate, because I got kickboxing at 8.
It is 7:30 on Thursday, but I can do earlier. If everyone's happy with 7, I can do 7.
If everyone can make it. If not, I may just have to leave it like 10 because it's only up the road. I may just have to leave it like 8. That's all.
Can everyone do 7 on Thursday?
Yep.
Normally 6:30, isn't it?
Oh yeah, of course it is. Yeah, sorry, it is. Yeah, you're right. Yeah, 6:30.
I think the better, mate. If you do,
it is 6:30. You're right.
Yeah, sound
cool. All right, dudes. Well, look, good to see you all. Well done, KB. Well done, Jace. Good work there. Steve, Dom, we'll go through yours on Thursday. If you need anything, just give me a shout, all right?
Yeah, perfect,
Yeah,
mate.
right.
Nice one.
Nice one, lads. Good to see you. Cheers, mate.